Good evening, ladies and gentlemen. It is actually a pleasure to be here tonight to give you the story of Nusantara. At the back of the room, you'll find a copy of our latest investment presentation. It's not the same presentation I'm going to present, but all the detail in the investor one matches this, so you'll get all the information. Disclaimer, read that. So, as Richard said, we're a new company. We IPO'd on the Australian Stock Exchange in early August with a raising of $16.2 million. Not only was it one of the largest gold IPOs in the last 5 years, the whole IPO was a bit unique because we actually IPO'd a mature development project that is going to go into production in less than 3 years. So we're fast-tracking this project all the way through to DFS, construction and then production. The IPO was achieved with very significant support from our major shareholders, as you can see here, but importantly we were able to attract Xiaoxing Mining, which is a large gold producer in Shandong province in China, and they were great support for our project. As a new company, our vision is to grow a gold business within the Asia Pacific, and at the moment our key asset and our only development asset is the 1.74 million ounce gold resource project. Great way to start. The project's located in South Sulawesi in Indonesia, and we currently have a market cap of around about 35 million, and we'll talk about that and the valuation as we go through the presentation. Hit the button. All right. There we are. Here we go. So we own 100% of the Awak Mas Gold Project. The contractor work encompasses over 14,000 hectares in Sulawesi. The project was first discovered in the late 1980s and has had a number of owners who've completed significant drilling and technical studies over the years. So as you can see on the slide, the project has over 1,000 diamond drill holes and over 124 kilometres of core, and all of that core is intact and stored on site. So that provides an absolute great database of knowledge that really allows us to confirm the robustness of the mineral resource, and it provides a great foundation for the development of the project. The project has been held by unlisted One Asia Resources since 2009, and they completed a PFS in 2012. So all these previous studies have suggested that we've got a project that has a 10-year mine life and will produce around about 100,000 ounces per year with very competitive margins. As shown on the picture here, the project's made up of the Awak Mas deposit. It's about 90% of our resource base, very large pit, as we'll talk about shortly, and 2 satellite pits, Salubalu and Tara. In recent years, development of the project has slowed, so the IPO that we've just completed, with the support of our major shareholders, now is the first step of reinvigorating this project. So what has changed? Well, this large resource project didn't really have a clear pathway for development, so we've changed the project fundamentals, and the project now has a very clear trajectory to production. As I said before, we're fast-tracking this low-cost, long-life project. Resource drilling is underway. The DFS have commenced. Production has commenced with the DFS targeted for completion mid-next year, with a decision around about that time for development, with production targeted in early 2020. So the first step in reinvigorating the project was to redefine the geology and the resource model using that extensive database, and we started from a clean sheet of paper. The resource, which was announced in May this year, now better reflects the geology, is very robust, and now is suitable for the development work that we need to do through the DFS and construction. The Awak Mas mineralisation, as you can see on this picture, is characterised by 2 stages of mineralisation. You can see in pink the thick zones of flat-lying continuous mineralisation, evident by very consistent alteration zones in the core. And that mineralisation predates the red near vertical veins that you see in the picture, and those veins are reflected in the core by fracturing and brecciation. Each of the domains within the Awak Mas area is separated by continuous ore body size scale faults, and you can see the ore body gets truncated and displaced around the fault. So once we reinterpreted the mineralisation, we used LUC resource modelling for the boffins in the room, and we used that to define this new resource of 1.74 million ounces. The resource is contained within a 1,400 ounce US pit shell, and as you can see from the stylised picture here, the resource actually extends beyond that pit shell, which represents a lot of opportunity going forwards. In developing the new model, it came evident to us there was a lot of opportunities to grow the resource. So straight after the IPO, we've used the IPO funds to commence an 8,000 metre diamond drilling program aimed at increasing the resource by 300 to 500,000 ounces. So if successful, that pushes our resource base over 2 million ounces. And quite obviously, that resource base then influences our pit optimisation. As shown in the picture of AWAC Mouse here, the yellow dots reflect the proposed drill holes and the blue dots are the drilling that's completed. So this program is about 40% complete, and today we made an announcement that updated the market on the assays. So I really encourage you to go to our website and have a look at the assays. So we're aiming for this resource drilling to be completed around Christmas, which will allow us to have a major resource update in the middle of the first quarter next year. This picture shows two sections from the first 13 holes that we drilled. And as you can see, we've had really great results in confirming the mineralisation and the model that we put together. So in pink was our geological interpretation and resource model that we completed in May. And you can see the trace, and in blue, the intersections. And you can see very clearly that the intersections and the assay results are matching the resource model very well. And that's important for us because it provides confidence in the project going forwards. You can also see on both of these holes, they've been pushed beyond the resource envelope. And the reason for that is we're looking for resource extensions below the proposed pit level that gives us an opportunity to grow the resource. So we talk about what's changed. This is one of the game changers. We signed an MOU with the PLN, which is the Indonesian National Power Company, and this now provides low-cost grid power to the project. This project is about 40 kilometres inland from the coast, and there's a major power line along the coast that will allow extension into our project. Importantly for us, that is a change in the way that we can run the project and in processing, which I'll talk about in a minute. But as you can imagine, the previous PFS study was based on a coal-fired power station. So you can imagine the logistics of moving coal inland and the capital cost and the high operating cost of running a coal-fired power station. So this is a real game changer for the project. The rest of the area is blessed with really good infrastructure. We have port facilities that allow us to bring in equipment and unload them and truck them into the site. We have access to a high-capacity fibre optic network that we can take into the site for process control, communications, etc. And the area is serviced by daily flights from Makassar. So we have a really good resource base. The road to the site from Belopa on the coast is currently a mix of paved and unpaved road. It does require an upgrade, and some of the bridges also need to be strengthened as we move construction equipment in. So again, really good real estate location for us given infrastructure. We've now been managed to complete a whole range of new test work focusing on leaching. This project previously had a basis of gold flotation, and we believed that leaching was a better way to go forwards. So this recent test work now confirms that whole of ore CIL leaching will deliver us recoveries between 90 and 94%, which is a 2 to 3% increase on the recoveries from the previous flow sheet using gold flotation. So this change can now be achieved with similar capex, and obviously given the power, this whole change in processing levers off that lower power cost. So overall, this is a big step change for the project in terms of economics, simplifying the processing route and making it more robust as we move forwards. The AWAC Mouse pit is big. Right? This pit is over 1.7 kilometres wide. The pit essentially allows us to scallop out the side of a ridge. What's really important for us in the project economics is this pit has a strip ratio of less than 3. So that drives really low mining cost. And as a whole project, when you take the satellite deposits in, we've got a strip ratio of less than 3.5. So you can just do the numbers. 10 years of mining at 2.5 million tonnes per ore at strip ratios of around 3.5 drives very low operating costs in the mining. So the pit's not technically difficult. It's a traditional truck excavator pit. So this brings us low technical risk. And as you can imagine, mixed up with the processing plant, you know, across the whole site, we have a low technical project for delivery. Nusantara owns 100% of the contractor work through our ownership of our Indonesian company, PT Mas Mindo. That means we have direct relationships with the contractor work. There's no third party between us and the ground that we're going to develop this project. And that's a very, very important distinction compared to some other Indonesian projects that probably sit in your memories from the past. We have a 7th generation of contract work that provides 100% of foreign ownership. As part of our fast-track approach, this project now has all the approvals ready for construction. The environmental studies have been signed off, the environmental approvals have been done, and the Government of Indonesia has now moved the project from study phase to construction, which essentially means they've given us 36 months to deliver this project and pour gold, and that's our intent. Previous owners identified a range of very exciting exploration targets, and they're shown in red on this slide. You know, we're not very imaginative, so we have two exploration corridors. The eastern corridor between Sulawesi down in the right to Tara up in the top left, and we have the mine corridor between Awak Mas and Sulawesi. Some of the trenching results and diamond drill results have been impressive. 15 metres at 2.5, diamond drill holes 10 metres at 2.2, another trench 20 metres at 4.15 grams per tonne. So there's obviously a lot of opportunity within the COW for us to expand the resource. And if we just look at our priority area, the mine corridor between Sulawesi and Awak Mas, obviously a priority because that's where it's as close to the processing plant. We have trenching results of 35 metres at 3.25 grams per tonne and trenching at 20 metres at 4.15 grams per tonne. So today in our announcement to the market, we've announced that we're going to commence a 2,000 metre exploration program focused on this area to see if we can deliver more feed to the processing plant. Not everything's technical. You know, we believe that our values of caring, integrity, teamwork, accountability and excellence underpins the way that we approach our business and will secure our success. Our previous owners, One Asia Resources, worked very well with the community and regional stakeholders to build a very great win-win relationship. We've continued that work and we enjoy great strong support from the local communities and the South Sulawesi province. And these relationships are critical for us as we move the project forwards, and as we advance, we have a great range of employment opportunities, business opportunities, and will improve education and medical facilities within the area. So the DFS is focused on delivering a robust project by mid-2018. Previous work, and we're going to confirm this in the DFS, delivered a project with a 10-year life, delivered 90,000 to 100,000 ounces a year, had all-sustaining costs between 500 and 700 US an ounce, and required a capex of somewhere around $150 to $170 million. So if you match to that development schedule, resource drilling underway now, DFS completion mid-next year, project approval thereafter for consideration, and production and gold pour in early 2020, a really step change process and fast tracking all the way through. As you can see in this slide, at the moment people don't fully understand the Awak Mas story. This project has been around for a while, a lot of people have forgotten it, but right now the project is very undervalued compared to our peers. And as you just heard, this project is fast-tracked, delivering gold production within 36 months, with a great exploration potential. So we believe there's a great opportunity here for value to grow as we continue to de-risk the project. And when you think about it, the project's already been fairly de-risked. 1,000 drill holes, 120 kilometres of diamond core, a new resource that's proving itself, and a DFS that's underway. So just a summary, we believe the work that we're doing now is really unlocking the value of this project. And we're really committed to delivering it in 2020. The project's supported by a very large mineral resource with potential to grow that resource. As you heard, we've got established infrastructure, low-cost power on the way, very low technical risk with great approvals in place. So the project is really development ready, and that's the way that we're treating it, and I think it's a great opportunity. Thank you very much.